What's up, you guys? So lately there's been one stock that's been all the rage, GameStop, ticker GME. This stock is up 7-fold just for the first month of 2021, and 2021 is not even over. In the last 52 weeks, this stock has fluctuated so much that it was as low as $3 and now it's as high as $160. Just yesterday, the stock has spiked another 100%. It's doubled again. So what the heck is happening here? So today I'm going to give you a breakdown of what the heck is actually happening here to help you make sense of what a crazy market it is right now. What's up, you guys? Welcome back to my channel. This is Alice. Welcome back to Money with Alice, where we talk about all things personal finance, investing, and so much more. If you haven't already, make sure to give this video a like because it really supports my channel. Did you do it yet? Okay, cool. My senses say you have done it, so now we're gonna move on to the good stuff. Onwards to the rest of the show. So first, let me introduce the main stars and main players of the story. We got GameStop. So what is GameStop? Well, for those of you who are unfamiliar, GameStop is a brick and mortar, so retail store that sells mainly video games. As many other retail stores, it's been suffering a lot due to the pandemic. So it was actually expected to close 450 stores just this year. The second key player here is the WallStreetBets. So this represents the everyday investors. Lately, they have been all the rage. This is originating from a subreddit called WallStreetBets, and it actually has over 2 million subscribers. So WallStreetBets lately has gotten to be really popular because everyone's stuck at home. A lot of people are trading stocks with their stimulus money, and also now that everyone's working from home, they have a lot more time to explore. So this forum has really boomed in the last couple of months. Now this is a key player to keep track of, and we'll call them also synonymous with the retail investors or the Main Street investors. All right, so the third main player here is the hedge fund guys. These hedge fund guys are like the big players. Think of them as like the whales of the market. So they have a bunch of money between all of them, and any sort of movement they do generally causes a big movement in the market of the stock price, whether it's up or whether it's down. For the sake of this story though, for GameStop, the main player here is Melvin Capital. So Melvin Capital is run by a guy named Gabe Plotkin, and he has $13 billion that he's managing as part of Melvin Capital. So something to keep in mind as we go through the rest of the story. All right, so we've introduced the main characters. We got GameStop, we got the WallStreetBets, and we got the hedge fund Melvin Capital. So now let's discuss the series of timeline and developments that's happened and what the heck is actually happening right now. All right, so let me give you a breakdown of the timeline that has led up to all of this event this week and all the craziness. So throughout 2020, GameStop has been trading pretty poorly. Stock price was around $5 for most of the year, pretty flat. So given that the performance of the company had been doing pretty poorly and the stock price was trading pretty poorly, a lot of these hedge fund guys like Melvin Capital or Citron Capital thought that the business would probably go out of business pretty soon, and they thought that the company would go bankrupt. Given that the company was going to go bankrupt, they decided to take on what's called a short position. So when they take on a short position, they're betting that the company will go bankrupt and the stock price will go down. What exactly is a short position, you may ask? When someone short sells a company or a stock, what they're doing is, rather than buying stock in the market, they are borrowing someone else's shares to short in the future. So they're hoping that the way that they make money is, as the stock price goes down, their short position becomes more valuable, because in the future, when they close out that short position, they're gonna have to buy back that stock price at a lower price. So they're gaining money on the difference between when they short sold the position and when they close out the position. The short position here actually grew so much that this stock became one of the 30 top shorted companies in the market. Actually, at one point, as of latest, the short interest ratio, which is the amount of shares that are represented as a short position as a percent of the actual total shares that the company has, was 140%. So this is called the short interest ratio. The higher the short interest ratio, the more amount of shares are actually being shorted by other firms for the stock. So GameStop had a 140% short interest ratio. This means that a lot of people were betting that GameStop would go down and their company would be run through the grounds. But there's been another party that's been super influential, the WallStreetBets. We'll call them the WSBers, okay? So the WSBers recently have been making a lot of these meme stocks really popular and have been able to increase the price a lot because they've gathered the entire Reddit community, and basically now everyone is pushing up the same stock prices. So some companies you may be familiar with that have become meme stocks are like Palantir, Tesla. So Tesla also had a really high short interest ratio earlier in 2020. But the stock price has done tremendously well. Part of that is driven by the WallStreetBets. So when the WallStreetBets noticed that GameStop had a really high short interest ratio, they knew that a lot of these hedge funds were betting against it and taking out short positions. So they took the opposite side. What did they do? Well, they started buying a bunch of shares in GameStop, and they started buying not just shares, but also call options. Now, just for a quick reference, what are call options? Call options is a securities instrument where rather than buying the actual stock, you're buying a contract that promises you that in the future, at a certain price, you're able to buy a certain amount of shares at a certain price. So when you buy one option in GameStop, you're saying that in the future, at a certain point, you're entitled to buy up to 100 shares at a certain price of GameStop. So that's a lot of underlying shares that you're buying with just one call option contract. So while these WallStreetBets were buying call options and buying shares of GameStop, this momentum was further fueled when the CEO of Chewy, which is a online pet food retailer, decided to take up over 10% shares by buying up in the open market of GameStop. And then on January 12th of 2021, he got himself on the board of GameStop. So now he has a board seat on GameStop through almost like an activist movement. The market viewed this news really positively. In fact, from January 12th to January 13th, the stock price rose for GameStop from $20 to $30. So that's a 50% increase in just one day. Okay, so the accumulation of this market dynamic has caused what's called a short squeeze. So these WallStreetBets and everyday retail investors, or also the Main Street investors, have been buying up a lot of shares in GameStop or buying up a lot of call options in GameStop. So what this does is it drives up the stock price of GameStop. Now, remember, there's also the hedge fund guys, right? So the hedge fund guys were taking a short position. So as the stock price goes up, they're losing a whole ton of money on their short positions. So now that they're losing a bunch of money, what do? Well, they're gonna have to close out their short positions. So how do you close out a short position? You have to buy in the open market and buy shares of GameStop. So what happens when you buy a share? You drive up the stock price. So now you have this feedback loop where as the hedge fund guys are trying to close out their short positions, they have to buy in the open market, so that drives up the stock price even more. So those people who are still shorting the market now have to cover at an even higher price. And basically you have this loop where as the hedge fund guys are closing out their short positions, this drives up the stock price even more. And then for the other hedge fund guys who haven't closed out their position yet, they have to buy in the open market because they're now losing even more money because the stock price has gone up. So they have to close out their short positions by also buying in the market. So this stock price just keeps on fueling itself and keeps going up because of this short squeeze.
But wait, there's more.
So there's another concept here that's playing into the factor that's called the gamma squeeze. So in addition to the short squeeze, you have the gamma squeeze that is also driving up the stock price. So what is gamma squeeze? Well, remember how when I said the WallStreetBets were buying shares in GameStop, they weren't just buying shares, they were also buying options. So one option, right, represents 100 underlying shares. So every single option you're buying represents 100 shares of, in the future, how much you can buy of shares in that actual GameStop stock. When you buy a call option, there's someone on the opposite side, right? When you buy something, there has to be a seller. So what are the sellers doing? The sellers of the call options at GameStop right now, what they're doing is they have to accumulate shares in the market to hedge themselves. So they're buying in the market in order to hedge themselves for the future when they actually have to deliver that call option and actually give those shares to these WallStreetBets who are buying the call options that need to be exercised in the future. So what does that do, right? As the counterparties are buying more shares, of course, what you see is that the share prices continue to go up. But there's another kicker here. So as the sellers of the call options when the stock price goes up, what is called the gamma risk that they're trying to hedge here, the gamma risk continues to go up. So as the gamma risk continues to go up, the number of shares they actually have to buy in the market to hedge their gamma risk increases. So now you have a lot of these counterparties who are trying to buy more shares in order to hedge their increased gamma risk as the stock price is going up. But wait, the stock price is still going up because of the short squeeze. So now you have the short squeeze, which is compounding on the gamma squeeze. And as a result, this just fuels the skyrocketing price that GameStop has been happening for the last couple of days. So what we're seeing now is the feedback loop that the gamma squeeze and the short squeeze feeds on top of each other, right? So with the short squeeze, as the stock price goes up, the short sellers have to cover their shares, they buy shares in the market, drives up the stock price. But as the stock price increases, the gamma risk increases. So the counterparties of the call options have to buy more shares in the market to actually hedge their gamma risk, which is also increasing the stock price. So as the stock price for one increases, the stock price for the other, and the need to buy more shares increases. So basically, they're just feeding back on each other, and your stock price is just continuing to skyrocket. And that's what you're seeing for GameStop right now. Gamma risk and the short squeeze just continue to play on each other. They continue to feed into this vicious cycle where the stock price just continues to skyrocket every single minute. Now, both of these factors, the gamma risk and the short squeeze, have just been fueling this insane growth of stock price on GameStop. Okay, so now that you're aware of the situation, you might be wondering, what's next? Well, honestly, I have no idea. This is a very live situation that is changing every minute, every day, every week. So far, what do we know? Well, Melvin Capital, which is the big hedge fund guy that took a huge short position on GameStop, so far is down 30% of their $13 billion. So that's a whole lot of money that they're losing on GameStop. And what we know is that recently, Point72 and Citadel, two other hedge funds, have decided to bail out Melvin Capital because they have been losing so much money that they need someone else to just bail them out, and they need that money. So Point72 and Citadel have stepped into the rescue of Melvin Capital. And rumor says that they are in the process of closing out all their short positions. So what should we see as they're closing out the short positions? Well, we should see that GameStop should continue to rise. In fact, as of January 27th, after the stock market had closed, the stock price for GameStop rose another 130%. Now, January 26th, the market closed, GameStop was trading at $150. And after the market closed, at the height, it was trading at $240. As far as what happens next, no one really knows, but this is the ultimate battle of the Main Street Wall Street bettors against the Wall Street hedge funds. Main Street versus Wall Street. This is like some intense battle that is happening right now. As far as next steps, we gotta keep observing and see what happens. Is it the Main Street guys that will win? So far, it seems like Main Street's doing pretty well. Or is it the Wall Street hedge fund guys? Oh, by the way, let's add another wrinkle to the story. Tech giants like Elon Musk, or literally the richest person on earth, has just tweeted supporting GameStop. So that's just gonna add more fuel to the fire, and this GameStop thing is just ready to blast off. But how long can this last? No one knows. Alrighty folks, so that is it for today. I hope this helped you to make sense of the market dynamics and the actual mechanics of what is actually happening to this crazy market right now. Make sure to give this video a like and definitely subscribe so you don't miss out any future videos from me, and I'll talk to you guys real soon. But until then, hold on to your hats and definitely sit down because this market is insanity.